Hey everybody, well, Tim Knight here. It's been quite a week. I'm gonna make 3 videos focus on ETFs, and instead of being lazy like I am sometimes and just going through them alphabetically, I've actually taken the time and trouble to come up with some logical groups, and they're nice bite-sized videos. I'm not going to give you 93 symbols. It'll just be like 8 or 9 per video, so I can say a few words about them. So this is going to be the majors, kind of the big important ETFs. And you may recognize that Ethereum's not an ETF. Tim, come on. I know. But I at least wanted to kick off this video with the animal spirits. Because I've been mentioning 1700 ever since Millard Fillmore was inaugurated into office. And finally it's happened. And so what? Well, the so what I've tried to talk about, which is an analog. I can make use of our layered charts feature to try to show you. I didn't rehearse this in advance, so let's see how this goes. And the idea is something along these lines, like something like that. That's better. Something close to that. And the idea is that the last time it broke like this, so the blue here is the present price action, and the gray is what happened last time. And I didn't even kind of follow it to its bottom. But you can see the analog's pretty strong. And looking at it more simply, here is pretty much equal to here, where the failure took place. And you can see it kind of doing a nice steady bear market-ish tumble afterwards. So, and I've shown you before, and I guess I'll just show you again real quickly, that there is definitely, it doesn't work too well, does it? Here, we'll use our layered charts. That's too messy because the percentage change is so much different. We'll use layered charts, my favorite friend. Sync them. Nope, got to go the other direction. So we'll change to layer 1, sync them. And I think that's right. Spiders in Ethereum, yeah. So you can see here, again, the percentage moves are so different, it's kind of funny to make out, but there's a definite correlation with, in this instance, you can see here the breakdown which took place. I'm very popular. Sorry for all the bings and booms. Everybody's trying to reach me. So this is the breakdown of Ethereum last time, and there is what the equity market did. So enough of the animal spirits, enough of Ethereum. Let's get on just to the big ETFs, which is what I promised you in the first place. So the spider, this is the king. And let me just say right here and now, what happened on Friday, I think, makes the bear's job so much easier. It is all well and good that things fell hard Thursday. That's fine, peachy, super duper neato, all that, yay. But the change that happened on Friday, thanks to the latest inflation numbers, makes charting this bear market one notch easier, thank God. So I say again, Thursday was great, made a lot of money, yay, 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 but Friday made the difference. And as I mentioned in the video that I did on Friday afternoon, for all my bitching and pissing and moaning and whining and whinging about this 8-day imprisonment, it was exactly what we needed. Because the bulls, God bless their black souls, tried to push things higher, and the little bastards couldn't. And you can see, as I showed earlier, it's just incredible. Just how the volume withered away, you know, like a bull on his honeymoon, just like teeny tiny little flaccid nothing. And it's just comical. I mean, look at that's just sad. 57 million shares. How about Friday? 3 times that much, you know, no problem. So incredible. And so that 8 days was a real blessing in disguise, because it proved that they couldn't do it, and that this formidable overhead supply did its job. And finally, once the little SOBs gave up, we fell hard on Thursday and fell hard on Friday. both with like one of these fat 90% down volume days. So it's just sweetness incorporated. And I will also mention that, I mean, if we crash on Monday, shame on me, because I'm not that heavily positioned. I'm kind of heavily, I'm 84%. Let's put a number on it. I'm 84% invested in my main account, 0% invested in my personal account, 0, all cash, God help me. Because I'm so friggin' sick of seeing profits disappear. I've had enough. But if the market gods are listening, and if you're taking requests, what I would like you to do is push the market back to the gap. Give those bullish dicks some hope, and let me short some more. That's what I'm after. The S&P 100 ETF, that is symbol OEF, has, no surprise, exactly the same pattern, same 8 days of imprisonment, nice hard down Thursday and Friday, and a gap. Yay, love the gap. Terrific. The diamonds, a little trickier. I have not put this channel in the Bible. It's actually kind of lame. In fact, as I'm speaking here now, I'm almost wondering if this thing deserves to live. Because it's, you know, let's shoot it in the head. Boom, it's gone. It's just, you know, you can lay down channels and sort of, if you squint your eyes right, make them look right, but it didn't really belong there. So we'll just have this. This is the gap-based horizontal, which interestingly, the gap matched the low of the February low, which was a major, major low for a while. So that's kind of interesting. And of course, we're cleanly beneath this channel. And I'll just interrupt myself again and say how kind of puzzled and disappointed I am that Attila, that is X-Trends Attila, is calling for a big rally back up to 4,300 on the ES. My charts don't say that. My charts basically say bulls are so screwed they don't even not going to know what to do with themselves. My charts say bulls are utterly and completely and entirely hosed. But I respect Attila, and he's been right lots of times. And so that's why I'm 0% invested in my personal account. And if we crash on Monday, my personal feeling about Attila will diminish. But that's where we're at. The companion to the diamonds, the transports, IYT, terrific down, falling nice and hard away from its own topping pattern. IWM, as much as I like it, it's a little bit messy, teeny bit messy. I'm not crazy about the fact that it got this high above its Fibonacci. I mean, I don't mind a penny or two. Like, this is fine. This little teeny violation, that's totally, totally fine. This, you're making me angry. I don't like that. I don't like this. This is messy. I don't like messy. I like clean. So what I'd like it to do is work its way down to the next level down there. But this bothers me. MDY is very similar to IWM, even though the markups I've drawn are quite different. And you can see here that we've repelled off this trend line. We gap down. It's thinly traded, so I don't really touch MDY. Let's end with the cubes. NASDAQ 100 makes the internet bubble look like the bargain of a lifetime. Because I mean, the internet bubble was crazy. This was batshit insane. And so we're coming off of that. And we have here too a gap, which I greatly appreciate. And once again, see, everybody wants me. Why am I so popular? Anyway, we want to see it retrace to that gap and then barf all over itself. So that's it. That is it. So that's the majors, and I'm doing a couple other videos, but I feel so much better now than I did on early in the week. Goodness gracious. All right, see you later.